Fenton.
Witten, I'm back.
You're back, mate. You're back from your Fijian holiday.
Bulla, everyone. Bulla. I was thinking about intentionally starting tonight late just so I could say Fiji time, but
Isn't that so true? Yeah, don't worry about it. It's Fiji time. It's Fiji time. Yeah.
Talk about a population that knows how to relax. I tell you,
mate. I think we could all probably learn a bit of one or two things from those guys. That's for sure. When it comes to taking it easy.
Absolutely. I was doing my MBA in relaxation, I think.
Well, mate, as always, those things are too short. Jeanette, how are you, mate? Happy long weekend. Yeah, we got another long weekend. Well, listen, April, well, sometimes potentially a bit frustrating. On the flip side of that coin, we've all got a little bit of extra downtime in April, which is kind of nice. So hopefully we can all take advantage of that. Mate, I've got a little bit of rain here in Queensland. Anytime Fenton mentions he's going to come to my place in the Gold Coast, it starts raining. Literally started raining right now.
Unbelievable. Absolutely unbelievable. Literally every time, isn't it? Mate, I bring the rain. I bring the rain.
You are the rainmaker. You are the rainmaker, mate. There you go. Well,
I just can't believe it, mate, that I've just come back from Fiji and I still look whiter than you. Like, how is that even possible?
Mate, it's the lighting, mate. I've got my lighting sorted. That's
it. I'm gonna dial mine down to Bondi Bronze, I reckon.
Make yourself look a bit more streamlined. Well, folks, while Andy's trying to give himself a fake tan with the lighting and the camera, good to see you guys jumping on. There's a bunch of you guys in there, and hey, g'day to Jeanette and Jeff. A few comments already, so give us a shout out. Who's dialing in tonight? Great, be good to hear from you guys, and thanks for joining us for another Wealth, Wine, and Wisdom. Wealth, Wine, and Wisdom. We had a little bit of a break last week, Easter. Andy going to Fiji, having a little holiday, and we're back at it this week. There's 2 weeks of stuff to cover, Andy. Plenty on. Afternoon, Alison. How are you going? So, quick shout out to the crew, Jeanette. Looking forward to a bit of a weekend, that's for sure. Jeff is always here. Good to see you, Jeff. Yep. The old spicy cough's getting around, folks.
Albert Sneezy. I love it. Oh, I love it. Let's not even start on politics because, jeepers creepers, you can't even escape it over in Fiji. Just how bad is it? Oh, don't even get me started.
And Roz reckons you should head up to the sunny coast, mate. It's good for getting a tan up there. So maybe he'll take you up on that, Roz. Maybe.
Well, you might regret that, Roz, because the last time I was up in the Sunshine Coast was about 15 years ago. I was up in Coolum. I was presenting at a financial advisors conference, believe it or not. I was presenting about structured products and various different things, trying to teach them how to use it. And they had the biggest floods that they had seen in about 100 years prior to that. Literally the whole dock was underwater. We almost couldn't get to the restaurant.
We better track your movements, Fenton. Every time Fenton goes somewhere, he causes a flood. Well, there you go. When was the last time you were in Sydney, mate? There was floods not so long ago. Well, mate, listen, you were in Byron only a moment ago, and that we flooded there too. I think we might be onto something here.
Well, mate, I tell you what, I think maybe even the weather in Fiji has Fiji time, because as we were leaving, the power started going out in the airport multiple times because of torrential rain that was coming down. But as per Fiji time, it was late. So it missed me. I got out in time.
That's hilarious. Well, good to see a bunch of you guys on today. And there's plenty lined up, folks. But as we do, Bob, how are you, mate? Good to see you on as well. Quick little sort of intros, Andy and I and you guys. A lot of you guys have joined us many times over the last 2 years for Wine and Wisdom, Wealth, Wine and Wisdom. And, started because, business owners and investors, property investors and equity investors alike certainly had some uncertainty in the marketplace. And we thought we might help you guys make sense of that at the end of each week, because we were certainly trying to make sense of it ourselves. That's for sure. And, we think this conversation on a Friday, a bit more relaxed, a bit more casual, with a glass of wine, gives us a chance to debrief the week. So if anyone's new, Robert, saying hello. Good to see you, Robert. Mate, thanks for joining us. This is what we do. Andy Fenton from the world of finance and banking. Over 20 years. Myself, Jason, in the world of real estate. And we sort of try and interpret, the bibs and bobs of what's going on out there in the world of the market. And we do have a rough kind of idea of what we try to do each time. Often there's plenty of stuff in the news, Andy. Plenty of stuff in the news. And we like to make comment on that. Sometimes it's it's a bit of fun. So sometimes it certainly winds you and me up. And we're trying to make sense of that, folks. Certainly, we think if you got any questions, we'd love you to shout them out.
Fire them through.
Yeah. I think we did all right out with the questions last time, didn't we? I think we answered most of them. We will attempt to answer questions. That would be good. So chuck them in the chat now, so we know what's their team. And Graham, good to see you, mate. And last but not least, sometimes there's some things we reckon you should know, and that's kind of the very rough format of this evening's show. But we could start out with this. Stocks got smashed today. Bob was in the market. Things were happening, Andy.
Bob should be a reporter, I reckon. you should work with the Fin Review with headlines like that, mate. You'll make a fortune on the old clickbait.
Yes, totally.
There's multiple reasons about that. Would you like to know why they got smashed today?
Tell us, Andy.
Well, I wouldn't want to spoil the surprise. So maybe we'll go through some of the things that we've got lined up. I'm sure that it's going to come up. I'm sure
totally
it's going to come up.
Well, why don't you lob a few things over the fence, mate? Kick things off for the crew, and we can start to wax a bit of lyrical. Stick with us, folks. We usually take about 45 minutes to 60 minutes to debrief the week and talk about what's been happening. And, we'll take it from there. So, Andy, mate, what do you got for us?
Mates, well, first thing.
You have to move yourself, remember? You have to move yourself in your yeah. That works. That works perfectly fine. Perfectly fine.
I made my pip bigger. I just thought if I make mine bigger, I'll draw a bit more attention.
You're dominating me. You're dominating.
Yeah. I'm just emphasizing my incredibly large melon and forehead. I found this one an interesting one, Jace, because there is a lot going on in the world at the moment. Huge amount of stuff going on. Probably almost more than I've ever seen. And so there's a lot of different dynamics at play. And this is one that I almost think it's kind of like you can't have your cake and eat it too. And this was almost pegged in a negative fashion. And basically what they're saying here is the latest decline in markets in 5 consecutive years of falling Chinese investment in Australia. Basically saying China's not investing as much in Australia. Chinese investment in Australia plunges 70%. Outside of Bob's comment, we're damn near record highs, Bob, in the Australian share market, and we'll get to the reason why it got smashed in a minute. But I actually see this as quite a good thing, because it was only about 5 or 6 years ago where everyone was up in arms about China buying ports, buying strategic locations from a military perspective. Now, I just want to contextualize this article because, again, it's a bit clickbaity. So China was spending a lot of money getting arable land. It was getting spending a lot of money taking major infrastructural assets like ports, airports, seaports. And these were considered to be trade, but they were also considered to be rather strategic assets out in Australia. But you twist that a little bit, so that they're not interested in that as much anymore. Maybe, well, who knows? I don't know what they think about it. I haven't been chatting with them recently, but ultimately, what they're talking about when they're talking about the 70% is more around the infrastructural assets. So the ports. Right there, and if anything, they're probably divesting a little bit. Now, there's a lot of reasons why they'd be doing that, geopolitically, but also in a broader financial markets term. So I actually see this as good. I think that the repatriation of some of the larger funds and some of the ports and things like that being taken into either Australian hands or into what we consider to be diversified portfolio hands. And so a diversified portfolio hand would be an example of something like we've got Partners Group Global, which is a large private equity manager.
Yeah.
And they quite often pull investors' funds from like you and me, Jace, but we couldn't afford to buy the ports. Not yet. Maybe one day in several hundred years. But buying we can get access to the returns of ports and major infrastructural assets by these private equity funds. So they're changing hands potentially from the. There's a bit of feedback. Can you hear that on your end, Jace?
There was a little bit there for a second, Andy, but maybe it's fixed itself now. Maybe at your end. A quick hello to Kylie. Good to have you here, Kylie. Hello.
Hey, Kylie. I'll just pull it down on my side. Allison's well and truly in there. Maybe there's a bit of a defense stance there, but ultimately,
totally. Well, I mean, it makes sense, Andy, right? Like, at the end of the day, these things, and this is actually a similar conversation that, it's kind of like a two-edged sword here. In the world of real estate, we have relied, unfortunately, whether, I think the government really didn't think it through. And fancy that, Andy. Fancy that.
How could you say that, James? News break. A politician jumped the gun.
Breaking news. Breaking news. Well, for the world of real estate in Australia, we had gotten used to, foreign money, overseas money, helping us bring new stock to market. And, that actually provided a real estate production boom in sort of 2012, 13, 14, 15, which was quite good because we were actually, a decade low. There was a supply shortage. So the government thought they'd solved the problem. And then, obviously, not thinking through it to begin with and then going, well, hang on, if we do have foreign ownership of our assets, that's going to be a real problem for us long term, etc. So then they went the full other side is like, everyone get out of town. We're going to charge you, more than you should. And so there's literally very little, it was the majority was Chinese money and some money from India in our construction and development world. And, we're on the other side of this now, like the Australian marketplace doesn't have the resources, Andy. It doesn't have the giddy up to go for it, right? So how do we solve these problems? And this is kind of like a bigger question too. Like, how do we solve those problems? It has to be through the right legislation and the right investment partners into the future and how you structure that sort of stuff. But it's interesting to see
attracting different types of investment, Jace. Like, I've forgotten an article I read just recently about private equity. I might have even brought it in here, but we're starting to get noticed in the private equity game again, or the venture capital game again. So for those of you who don't know, VC, venture capital, isn't Victor Charlie. It's not a Vietnam thing. It is it's a term for VC, venture capital, quite often. So whenever you hear VC these days, it's venture capital. And it's basically startup capital for businesses, or that next level of startup. You might have a concept, an idea that you're able to monetize. Then VC is the capital that people are willing to invest in your company to poof through the roof. And in America, it's a massive game. In Australia, it's infantile.
It's nowhere, right? It's nowhere. Our government is like they just don't see the vision.
Well, riddle me this and see viewers, the wonderful people out there, if you can answer this. How many times do you think that the amount of workers in tech dwarf the amount of workers in mining and resources? So
are you asking Australia, right?
I'm saying in Australia right now. How many more? So for every one person in the mining sector, how many are operating in tech? Is it 1 for 1? Is it half? So every one person
1 to 2.
Mining, is it 1 in 2? Is it 1 in 4? What do you think that number
is?
Do
the ratio. Say it in the chat, team. So Andy's saying, okay, how many people in each of those industries as a ratio. Put it in the chat. What do you guys think? Because, I mean, probably giving away the punchline here, Andy, but, the idea that, folks, the government's obsessed with things like mining and let's say, housing. But where is the growth businesses, the growth facts into the future? Adrian reckons 1 to 5. Bob's like 0.005.
Bob's a bit pessimistic today.
Yeah,
Bob,
but is it glass half full or glass half empty type of guy, Bob? No, good work. 5 to 1. 5 to 1. John reckons 5 to 1. Tech to mining. Andy, and I've got some things here to share a bit later on about how many jobs right now in Australia are up. But what's the answer?
It's a really good question. That's
Andy asked you a question you didn't have the bloody answer to. Oh, there you go.
No, the last, and the statistics vary depending on where you go, because what's tech, what's small.
Yeah. 8 to 1 says Joel. Yep.
More recently, for every one person employed in mining, there are 4.
There you go.
Tech of one sort, right? So now
Adrian was pretty close then. Adrian and John were pretty close. 1 to 4. 1 to 4.
Yep. There you go. And so, because you think about it now, tech is what is enabling automatic trucks on the road, that kept the trucks on the road during COVID. That number is going to skyrocket. So doesn't it make sense, Jace, as an industry, rather than giving subsidies and the money to the mining industry and saving WA, the old Save WA fund, that's incredible.
Well, they
Save
don't pay
WA.
their. Well, listen, hey, Western Australia is the only state in surplus in their state budget, and in billions in surplus. But anyway, I'll talk about that a bit later on. But it makes sense, mate. Like it's like, well, hang on, team. How do we stimulate the economy? Mining is going to get its fair share anyway. It's going to get its fair share anyway. It's there.
How do you get offshore money into Australia in the masses that produce productivity in Australia?
We need more businesses. We need more entrepreneurs. We need stuff in this country, because whether we like it or not, folks, Australia needs another 10 million more people. It needs a population of 35 to 40 million. Like, economically, that's what it needs to be, strong, and not have to rely, Andy, on just mining and farming for the rest of our lives. We have to be more than that as an economy, a country, as we roll along. So, it's an interesting conversation to have, this one. You and I are all about small to medium business owners. They're the backbone of Australia's, economic wealth. We do a lot of the heavy lifting. We employ, the most people, the support for those people is actually quite low in comparison to, the big mining giants, to be honest. So, they don't friggin' need that support. The small to medium business owners need that sort of extra, pick me up, because we're employing the most people, crying out loud. Anyway.
And paying the most amount of tax. We pay more tax as a group. Small to medium business pay more tax as a group than any other group in Australia by a massive factor. We pay.
Not if you work with Andy Fenton, because he's a genius. He'll sort of sort that right out. But
well, yeah. I mean, if there were a few more around, but unfortunately, Jace, there's not as many of us around.
No. And that's been sad, actually. You and I were talking about this before. I've got a little stat on this one. I might flick over to that just for a second on this. But folks, here's a little something interesting. Before, in a minute. Anyway, median cost of financial advice, Andy, has risen in the last little while, and that's, prices have risen everywhere. Sadly, that's pushed out, 100,000 people not going ahead with financial advice. But sadly, your industry, the financial advice industry, has been pummeled by completely unfairly, I believe, because the they shall remain nameless, ASIC.
The likely to litigate. Yes.
Yeah. Just ludicrous. Like they just want to manage like 5 big conglomerates rather than good quality boutique, passionate humans who want to deliver great financial advice. It's sad. It's a sad state of affairs.
And that's the true irony, Jace. Irony even is that they want to manage a few larger corporate institutions, but the reason why the Royal Banking Inquiry happened is when they were trying to manage a few large institutions that made up for close to 50% of the advice in Australia. It wasn't quite there; it was about 40.
Yeah.
They use their vertical integration for total profiteering and putting shareholders' profits ahead of the advice clients. And so that's where this legislation really came from, taking money from people who are deceased, taking money from people who, don't have capacity, horrible, horrible things that it was done en masse, but were done en masse by majority by, the people who are no longer in the market anymore. So now we're stuck with the legislation, and the legislation increase has been massive. It's driven people out. Jace, I've had conversations with you about it where I've gone, if I didn't love it so much, there's no way in hell I'd do it, because I know that I could run 10 different types of businesses and make significantly more money with less headaches, less effort. But ultimately, I love what I do in helping people, and it's a matter of being able to see this BS through. But unfortunately, fees jumping, not necessarily a bad thing, but the number of people getting advice, no, that's not a good thing at all. Because ultimately, Jason had a conversation today, just by the by, small to medium business owner, commercial property side of the equation, literally just rang completely out of the blue, and it's hard to find us because we don't make ourselves available. Back of the envelope conversation, $43,000 worth of savings in the first year, and then every single year after that, plus. And it's like that's a 15-second conversation, well, a 5-minute conversation that comes from it. There are plenty of ways of being able to make people a lot of money and pay a lot less tax. But ultimately, if you have less and less people in the industry, the costs are going to rise purely based on the compliance that's put on you by the powers that be, unfortunately.
Well, mate, 60 to 80% of the cost increasing is because of the compliance, the over compliance, not just general market, service industry increases because stuff goes up, right? So, you and you and I have talked about this numerous times. I think it's sad. I think it's actually disastrous for the majority of Australians. And the government doesn't particularly care. That's why, folks, that you need to listen to people like me and Andy about this stuff. You got to take control of your own destiny, and we can help facilitate that in one way, shape, or form. I had this chat the other day, Andy. I sort of said to people, all right, tell me in 30 years' time, what type of wealth do you want to sort of retire on? And people are going, $3 million, $5 million, $10 million worth of value, $100,000, $200,000, $300,000 worth of income. And I'm like, all right, well, tell me this, Andy, would you be happy to invest $5,000 a year, $10,000 a year? All right, let's say, let's do that over 20 years. Andy, invest over 20 years, $200,000, and you will end up with a $5 million portfolio that's going to create you $200,000 a year tax-free, or, you and I have chatted about the...
I've spent more on my education.
Yeah, and people go, oh, when you put it like that, it makes sense. And it's like, well, yeah, that's how it works. Like, it's like, what are you asking for? You're not asking for a car that goes down in value from fucking $100,000 to zero, right? You're asking for something that's like, it's going to set you up forever and you can pass it on to your family, So I think it's got a bad PR problem. And also, the government and the governing bodies are they're not on the side of the industry, and I just don't believe that, that's going to change anytime soon, folks. So,
and I quote well, I can't name the person I'm quoting, but it was a minister. Are you going to repeal some of these draconian laws that don't even apply now, that basically the people who cause the problem are no longer in the industry, aka banks?
Yeah.
And they flat out said no. Said why? Because there's no political pressure to do so. And they said, well, that's not in the best interests of Australians. And they said technology will do it.
Yeah, it's ludicrous, isn't it? You know, they just
technology will do it. It's going to be, mate. Fenton forecast for the future is that's going to be the great political slogan of whenever they can't fix something, technology will do it.
Yeah, yeah. Well, mate, Joel reckons he'll come to you one day soon. When he's ready, he'll be right there. But hey, folks, little bit of an interesting story here. Let's have a quick look at the house. This house is on the market, $17 million or more. It's had offers. It'll go unconditional real soon.
Is that because it's got three garages, Jace?
3 garages, Andy. Let's see. Well, there you go. You can park 3 cars there. That's good for the extra 10 mil. Hey, folks, listening in, tell me, this property was purchased. This property was purchased in 1980 in Noosa Heads, and is expected to sell for $17 million or more. What do you guys reckon? Tell me in the chat. Andy, have a guess, because I didn't tell you the answer when I was lining this up. What do you reckon these people bought this for in 1980, folks? So what are we, 1980, 90, 20? So we're 30. We're 32 years later, team. 32 years later. Tell me the number.
I'm going to say 34,000, Jason.
Well, Jeanette reckons $1 million. Jeanette reckons. Yeah, Jeff has read the same article I read. All right, these people bought this for $80,000, folks. $80,000 in 1980. And as of today, 32 years later.
That was a boom year, Jace. 1980 was a boom year. Just saying.
Boom year, yeah.
If they bought it the year before, I would have been bang on the money. It would have been 32,000.
Allison reckons someone's like, Teal, yeah, it's a bit ugly, isn't it? What's with the round bricks? I don't know. What are you trying to do? But anyway, there you go. 80 to 100 grand. It was 80 grand, folks. And there you go. So, listen, Andy, you and I have talked about this, in the short term, some of us can get a bit kind of, caught up in, the stock market going up, the stock market going down, right now, which I think is the worst thing that's ever happened to real estate, personally, is that they bloody produce a monthly report now on the property prices going up, which is a bunch of shit. Like, there's no way. There's no way that the speed of real estate transactions can be reported in that way. Like, it's not like the stock market, but they're trying to. It's rubbish. Well,
it's pockets within pockets.
It's like, pockets within pockets within pockets within kind of like, it's crazy, right?
if you segregated it out, and because in the stock market we can. Right, we've got value stocks, we've got growth stocks, we've got mining resource stocks, we've got industrials, we've got healthcare. We can segregate all of this stuff out, but what they're trying to do is they're trying to play a stock market game in a
the
property
world
commercial world, which is it's more commercial. It's more difficult to price commercial world stuff.
Yeah,
and property is still there because they don't have the data analytics or the decompartmentalization for a different, if I could use that word, like if you could chop a state down into different income profiles, perhaps, and then rate them perhaps by their desire, like seaside versus rural versus inner city versus units, like, and you start to decompartmentalize that index, then it's actually got some.
It's got some legs, right? Yeah. I mean, the stock market has had that legislated for decades. Like, I mean, a long time. You have to declare the income. You have to show this. You have to show that. Like, if you're on the stock market, there has to be transparency, but there's no transparency in real estate. Like real estate is really like it's a weird old world. There you go. John looked it up on RP data for us. 90K, folks. There you go. 1984.
Wow.
Yeah, check that out.
But what was it worth in 1983, John? We'll figure. Was it worth 30,000 that Andy said? But, mate, I was doing some reading the other day.
Thanks, John.
Thank you, John, mate. You're a legend. It's great data coming through. It's like we've got our analysts.
We need a show analyst. John, can you be our show analyst? It'd be good.
Amazing. I bet it's going to crash. Jeff's got to join. Who else? Jeff's got to join Bob tonight. Jeff, you and Bob are together. But will it? That's man. I've got so much data, and it's hard to actually analyze one way or another at the moment to kind of go absolutely one way or the other with markets. Jace, before we jump onto this next point, I saw an article just recently and I thought, this is beyond my pay grade, but it was saying that they're going to press to have all auction results publicly listed. Or no, we know you were joking, Jeff. It's all good. I was just joking back. Jeff's one of our positive, one of our positive guys. You don't have to join Bob now, Jeff. It's okay. Bob, and we love you too, Bob. We love it. We know you're joking. I hope. But so they were saying that they're making a push to make all real estate sales publicly available information. So if you buy a mega mansion, Jace, and you decide you want to try and keep it quiet, you can't. Just like if you go and buy BHP and you buy $1 million of BHP, you buy it at whatever price it is there. Yeah. What's behind that? Is there any legs in it?
It's an interesting one. Like, the real estate industry is very disjointed because it's state based, right? Where the stock market is national. So, I think it would be hard to pass that type of legislation, but it could get pushed through. You never know. Stamp duty is state based, land taxes state based, reporting on ownership is state-based. It's, I think that's fucking archaic, to be honest. But it needs to be national-based, and Andy, that could probably happen. That'd be my call.
Wouldn't that be a great unintended consequence if they did pass that legislation to make it visible? Because all of a sudden you go, well, why would I buy and sell in this state as opposed to this because of the duty difference?
Mate, every day of the week. Yeah. It's ludicrous if you think about it. Like, I'm a big property fan. Everyone knows. But I think Australia's obsession, the government's obsession, the state's obsession with income from real estate is disgusting. Disgusting. It weakens our country. Like it actually makes us weak and stupid. Like we need to be better than what we are. And they need to get off that gear, right? They're addicted to, property as their income stream, and it's like, listen, folks, you can't have it. It's stupid. It makes it expensive for first home buyers. It exacerbates price issues. Like it just causes all sorts of grief. And then they want to Andy the old bait and switch. Oh, let's blame property investors, or let's blame the investor from China. No. Let's blame the stupid politicians who can't come up with some ideas to create some income in another place, which is better for the country, for crying out loud. Anyway,
it's short term. It's short termism at its best.
Yeah, 100%.
And short term solutions have short term value. But long term consequences.
Yeah,
and quite often the long term consequences are never thought of. Classic example, long-term.
Well, they only bloody get elected for 4 years, Andy. That's the problem with our.
And then they get re-elected. Well, Dan the man probably will get re-elected down here in Victoria. He locked us up for 2 years.
We said we weren't going to talk about politics. I don't think we fucking stopped all night.
Well, Well, I'll stop just after this. Like, he locked us up for 2 years. So for those of you who are in other parts of the world, hopefully you're fit and well. But the Victorians and maybe the Sydney siders, what we're finding now is that we're allowed out. An unintended consequence of locking people up for 2 years means that we're not in proximity. We don't have immune systems. So now small to medium businesses are hemorrhaging in and around, I know, in Victoria and to a degree in New South Wales, because people's immune systems are not ready to reintegrate with each other because they've been locked up. So this is the unintended consequence goes down to productivity of business over the next 2 years. Next 2 years. That's a Fenton forecast.
Fenton's putting it out there. Yep. Yeah, you heard it here first, folks.
Productivity, and they're going to bitch and moan about productivity diving for all different reasons and rationales. But my tip is one of the number one reasons is going to be resources, and that's because the resources are getting sick because they've been locked up for 2 years.
Wow.
And we're seeing it. I speak with 20 plus business owners a week, and Jeepers Creepers, this is something that we're seeing in droves at the moment. And if you're a Victorian, shout out. If you're sick, there's probably a one in four chance that if you're watching from Victoria, you've probably got a lurgy of some sort right about now.
Well, Harry reckons, we don't talk politics here, but neck minute.
That's it. I'm off my soapbox, guys. I'm back down in the real world. Tell me about mortgage repayments.
Well, John, our producer, our technical producer, and our fact. Thanks, John. Last sold in 2016 for 2, and that's still a pretty good deal, right? You bought it for, what was it, a 90K in 1984. A few years later, it's worth a pretty good chunk. Andy.
Jesus, 1980. What do you call a few years, mate? You're not that old.
Well, all right. Well, I'm trying to make a point here. 2016 to 2022, from 2.5 million to 17 million. Crazy.
That's
what?
Huge.
Anyway, there's some weird shit going on right there. But anyway, that doesn't make any sense to me. I'm a property guy. I still like, who would do that? But anyway, they're not making any more oceanfront land. And, depends on who you listen to. You probably don't want to buy it.
I might disagree with you on a few fronts there, Jason. There might be a few more.
Well, buy 5 kilometres away. Anyway, but there you go. Hey, but listen, let's change gears. There's talk about interest rates everywhere, right? In America, in Australia, blah, 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 blah.
Powell was on. Powell just did a release. The Fed chairman did a release forecasting to the American market of a 50 basis point. I love it, right? Because if you said, what do you reckon's more provocative? And I'd love for you guys to type it in. What do you think sounds bigger, 0.5% or 50 basis points? I'd love it. Just put 50 or 1/2 for whichever you think sounds more aggressive.
If you're reading something and you're uneducated, or you're kind of like, oh, that sounds a lot,
mate. I love 50. It. I love it because they put it quote. He said, we'll drop it by. It might rise by 0.5%.
Yeah.
Right. Yeah. Here we go. There we go. 50,000. So, and every publication I saw it, it was a 50 basis point rise.
50
and
basis
9 times
points.
out of 10, you know what? When you say 50 basis point rise, do you know what people's normal response is, Jace? Oh my God, 50 basis points. And you go, yeah, do you know what that means? And they're like,
nah.
Well, no, what's 50 basis points? And you go, well, it's 0.5% because it's, and they go, oh.
That's not that much. Yeah.
It's not, but it is almost 400% increase from where it is. Probably the largest increase.
Oh, Andy, there you go. There's the headline: 400% increase.
Oh dear.
Yeah. Well, there you go. I mean, that's the thing with this sort of stuff, folks. It's all about this perspective, and you and I have talked about this. Ad nauseum, Andy, about the media. They need to get clicks. If you don't look at their articles, no one's winning at the newspaper. So they write those things in the way they need to. You know what I mean? And
That's
What do we
mine.
got?
I'll just put it up for 1 second. Brace yourself for interest rate hikes on mine, Jason.
Well, and what does that mean? What does it look like, folks? A couple of quick charts here. There's a few dollars coming people's ways. Andy, this is a PNI. I thought I had the interest-only table downloaded, but I must have used the same one twice. But, folks, if you're out there and you're an owner-occupier, yeah, absolutely. I'll delete that one and we'll just make this one a bit bigger. There could be some things you need to sort of lock away, depending on your mortgage. A $600,000 mortgage, $2,000 to $2,000, $600 increase. Now, when you say, because this is the thing, Andy, this is the thing, right? People go, all right, if my interest rate went from 2% to 4%. Like, just look at this, folks. Like, this is the stuff that people don't get. It's like, oh, my interest rate doubled, right? Where you go, oh, that must mean my payment doubled. No, that's not how it works. Like, look at that team. Like, it's like $500. So, and Andy, you set it up perfectly. It's the conversation. It's this kind of fear and ignorance and stupidity that the media want to portray.
That looks like 100% increase.
But we laugh, but and that unfortunately it's fake news. Dead right, Kylie. Right, dead right. It's just complete fake news. It's just bullshit. It's like, come on, you guys. Like, it's going up $600 if it gets to 4%. If it gets to 4%, right? So, and if it does, folks, it's still well under. It's 25% under the long-term 20-year average of interest rates. Like, it's just still cheap money. It's like, we have short memories, unfortunately. No matter which way you slice things. Actually, fortunately, because that's why we reproduce. If we didn't have short memories, we wouldn't have children.
I think there's oxytocin that might have a bit of a role to play in that one. But
the old oxytocin gets in there. Yeah, there you go. But, folks, listen, if you're owner-occupier, you got to budget that in, Andy.
100%.
And that's, you and I talk about this all the time. Proper money management is sort of having buffers and war chests in place, and understanding that there's things that happen that you can't control.
And this is where the pockets that we were talking about before, and I don't know anything about real estate. Well, I know a bit about real estate now. I've been hanging around Jason long enough, but I do know about personal finance, and where people overextend themselves, then they will get distressed, and you will end up with distressed sales.
Yep.
And it's distressed sales, I'm assuming, really, that really have when there's en masse, they can have big impacts in pockets of real estate. And the same thing happens in finance. It's just a slightly different way.
Yep.
But if you are living on the knife's edge, which none of my clients do, I can tell you that absolutely right now. Probably some live on the knife's edge of risk at times, but that's not where I put them either. That's a
self-imposed
for them. And geez, they've done well. I tell you what, they've been absolutely going ballistic. I'm like, geez, you take a hell of a lot more risk than what I will, but it pays off sometimes.
Yeah.
But if you're living on the edge of a knife, or the razor's edge on your principal place of residence, then this is scary. It's scary stuff. But if you're investing in the right areas and you're planning for this, all I've been seeing in the press recently, Jace, is and I've had that many clients ring up recently, go, could you please change the forecasting, because I've just raised my interest, I've just raised my rents, I've just raised my rents. I've had so many people call and say
it's underway, Andy, mate. And I've been saying it for over a year and a half. Like, I've been saying, folks, we are in the middle of a rental crisis. We've got a supply issue, and eventually, these people. Well, Jeff's doing some, well, good work, Jeff. Yeah, there you go. But Oh, there you go. But listen, at the end of the day, folks, our vacancy rate, so, the number of vacant properties available for rent is at the lowest we have seen for decades. Decades. Our supply chain is broken. Like, I would even go as far as to be dramatic and call it destroyed, right?
Well, is that because of property investors, Jace?
Mate, it's well, maybe, yeah.
Well, that's going to be that's another Fenton forecast for what the politicians will be saying in 2 years' time when this really comes home to roost.
Yeah, there you go. And at the end of the day, like what I say to anyone who says those sorts of things is go out and go and try and rent a house next week. Go and go and stand in line. Go and stand at an open home. And we manage properties in Brisbane, Newcastle and Melbourne. Go and stand in an open home and be there, where there's 45 people lined up around the block and they're offering, $100 more than the asking price before they've even gone into the house. Folks, this is the concept that's going on. We've got vacancy rates. We've got annual changes in rents. You look at that, vacancy rates is the lowest and rent increases. Now, in 2022, 16% up. Rental crisis is just beginning. Sydney's in all sorts. Worst is yet to come. Blah, 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 blah. It's all happening, team, and it takes time to flow through into the marketplace. And there's early warning signs. And you can, if you're actually paying attention, you can see it 6 to 12, even 18 months away in this real estate game. That is for sure. That is for sure. So, quick apology to Joe if the language is a little bit harsh. Sometimes we all get a bit excited, Joe. So appreciate you giving us a shout out, mate. But again, Andy, what we have also not only is, there's nothing to rent. There's and people have made wealth in the last 2 years. Why would they sell their properties? They don't want to pay capital gains tax. They're probably not ready. Hey, the rents are going to go up. I'm happy. Like you're saying, your clients are going, hey, listen, my rent's gone up, but the big story right now is that we've had a net immigration challenge, and it's very simple to understand why. COVID, right? But if you have a look at the trajectory of like a decade of government policy, they were saying, listen, the idea of over, the last 10 years, the government has locked in on, hey, we have had a declining natural population because we haven't been able to reproduce enough. We need to get enough people in the country, and we've got an aging population, Andy, as well. We need people in the country. Like, check this out, team. Check this out, folk. We have a record high.
Record highs.
Record high.
We really need some sort of a sound jingle for it, don't we? It could be this one.
Record high. Yeah, there we go. We go. What is it? We got a
record high.
A record high, folks. 423,000 job vacancies, Andy. In the 3 months of February. We're crying out for people into the country. We need more people, and mining's kicking off again. WA is getting a little run on and all sorts of stuff. Both you and I, Andy, we're looking for great people, financial planning, in the world of real estate broking, property management, investment coaching. I've got job ads out. I've got 10 job ads out right now, So that's what's going on, team. And then, which is awesome, for the economy. It's great, for the first time in a while, Jeanette's looking for, workers, Joel's looking for workers,
Let me give a little bit of a shout out for Jeanette, and I'm going to jump on a soapbox again, but it's bloody hard to find workers when the government pay people to stay at home. That's
It's true. It's bloody
no,
true.
get COVID, stay
Yeah.
home for a week. Hell,
Yeah.
take a month, take half a year for all I care. We're just the government, so you just stay at home and just chill out, and we'll pay you to do that. Look, record unemployment on the other side. It's like, listen, guys, come on. Yeah.
Yeah. Jeanette's with you, mate. But here's the drill. For all of us, hopefully, Andy, this comes to fruition. Now,
Mate, it's not a
for
hope, it's a guarantee.
it's going to come to fruition. Here's what's happening, team. We've got a backlog of overseas migration. It's locked and loaded. The government said, "Yep, let's open the doors." Here's what they've said. They said, "Listen, we're happy to increase the cap from 160 to 220. Let's see how we go, team. That's going to mean, we've got 1 million jobs coming in the next, let's say, 5 years. We need to fill those. Like, we're not having enough people. There's not enough 18-year-olds, entering the workforce. And like Andy, you and I aren't like employing an 18-year-old, like straight out of wherever. We need skilled labor, and the government has to do it. So my point is this, team.
I'm already thinking about putting 5 people on a plane.
Yes, certainly, John. Like, it's immigration keeps wages down. It certainly has in the past. Unfortunately, there's this kind of gap we have to fill. We definitely need to be skilling up our kids. I'm a big fan of that. I believe the government is not doing enough for business. Andy and I talk about this all the time. Not doing enough for business, not doing enough for our young people and their careers, and the people that are here. Again, they're being lazy, but on the flip side, it's going to happen.
I'll jump in on John's comment there. Immigration raises the average affluent income. Right. So yes, by standard, it'll keep it down. So there's a couple of things that we need to know, and I'm not being, I'm just going to say it. But, however it comes, it's actually statistically significant. So it's the reality. There is a no. God love him. There is like the unemployment rate. The 4% barrier is one where they say that 4%, it doesn't really get much below 4% because there is a part of the population that is not able to work due to injury or capacity, or doesn't want to work and never will work, no matter whether you have a gun to their head or not. Now, skilled migration policies have actually been shown to increase the average affluent wage, and what was called the average skilled wage. Over periods of time, because but over time, and I think, Jace, we had some statistics that we went through recently here where we showed if you judge something over 3 years, it looked amazing. Judge it over 7, looked terrible.
Yeah,
and so, but what happens with skilled people coming into the arena of technology, right? 10-year curve of technology in Australia now is going off the charts. Now it's rising, but it's taken 10 years for that to happen. Same sorts of things in medical industries, right? As we get people, because you've got to reach a critical of mass and economy of scale as a business or as a sector in order to be able to then pump the money back and increase the average wage. But it takes 5 or 10 years or 15 years, sometimes 20 years.
Takes a cycle. You're dead right.
Takes 5, 10, 15, 20 years, done right.
And unfortunately, to speak to your point, and maybe a little bit to John's as well and others, like, we just don't have the people. Like, we just can't wait. We can't wait, Andy. Like, how long are we going to have to wait? 5 years, 10 years? People aren't reproducing. Like, it's like the natural population's going down. The population's getting older. Unfortunately, this should have been discussed 20 or 30 years ago, and other things should have been dealt with. We're now dealing with poor and weak policy from a long time ago where, it wasn't It wasn't, we're brain drained. We don't pay people in Australia enough. They go overseas. Our industry is not attractive enough because there's not enough career advancement. They leave the country. There's lots of things. I'm not an expert in fixing it, but there's these things. What we do know,
there's a lot of behavioral economics papers that talk to exactly what you're talking about.
Yeah,
is where they reach a critical mass, they have enough investment into them, then they can instead of having people leap job, is what they call it these days, leap job, leave and get paid more somewhere else, which doesn't fix the problem of the country. Doesn't fix the problem.
It just weakens the country in the end.
Absolutely right. But if they invest in, then they provide the opportunity for the industries to mature. And case in point, have a look at the mining industry.
Yeah, dead right. I agree with you, Alison. If they didn't reduce your lending, you'd have a few more. There's this gap between ages 1 to 18. When they're 18 and older, just if you want more children, adopt them at age 19. Yeah, there you go, Shelley. Exactly right, mate. At the end of the day. But this is an interesting one, Andy. It's a conversation. There's 600 to 1 million people. 600 to 1 million people. So, team, 600,000 to 1 million people going to arrive in this country within the next 5 to 6 years. That's what's coming, right? And just from a real estate point of view and a business point of view, Andy, this is going to be a real interesting time. What's going to happen? What opportunities are going to arise with, this stuff going on, right? We can't stop it right now. It's going to happen. We need more people for more jobs and more stuff. It's arriving. It's underway. For all of us as property investors and business owners, how can we be in position? What can we do to take advantage of that? That's kind of probably the point, really, at the end of the day, to think about that, because it's coming. It's coming right now. It hasn't arrived yet, but it's on its way.
And it's like it's the slow. It's probably a bad analogy to use water at the moment, given what's been going on. But the way that I used to describe this transition is that if you have a board, right? You remember when you were a kid and you used to make the mountain ranges out of paper mache?
Yeah.
Make them on a little board, and then you'd pour water into them, and you'd see where the water would then go and settle in between the mountain paper mache mountains that you made. So what this is that maybe the world is getting a little bit dry at the moment because a lot of money is actually locked up in this intergenerational wealth transfer, and they're not going to do a lot until they're not here anymore, or very few of them do. That's what happens, right?
There's some other interesting stats on that one, Andy, isn't there?
And then they're released.
Yeah.
Now, this is like, if you have a look at it, literally, it's a 20-year. It's an emptying of the bucket over 20 years. Now, some people might say that this is a long period of time. It's not. Let me tell you one thing. One thing is absolutely for sure. Building wealth is a 20-year game. Politics is a 20-year game or longer.
Yeah.
All the things that we look at in short term, we should be looking at 10 and 20 years, and we should have measurements over time to get there. But ultimately, 20 years is not a very long time. And you live most of your life up to the age of 20, and then you think you know everything, and then it takes you to 40 until you realize that you knew nothing at 20.
Yeah. And then you get about trying to learn something by the age of 60.
Yeah, that's it. That's the game of life, right? But to put this into context, there's 50% there that's going to get poured in over the next 20 years. And that's significant. And that transfer is going to make some big differences as it flows through.
Yeah. And there's so many, statistical conversation to be had around the transfer from baby boomers. There's 65% of the Australian population who own business owners are over the age of 55 right now. So in the next 10 years, they're going to transition to retirement. So there's some really
65%.
Yep.
What was Stolte's number of what the population of Australia was who was business owners? It was low. It was
Yeah,
really,
it's
really low.
not a lot. You
No, it
know,
was like 5 to 15%, somewhere in, and I know that's a big range, but I
yeah,
just can't remember it. So I'd prefer to go high and low. But so if you go that, so that ultimately halves that number, which is already low, which is the largest taxpayer in Australia.
mate. Yeah. So there's some crazy stats floating around. But I think I might chuck this one out there here to finish. Maybe a little perspective conversation, Andy.
Let's do it.
So, folks, anyone heard this before? 1% of the world owns or runs, a large portion of the world's wealth. I've subscribed to a cool data provider, and they just produced and provided this chart. 1% of the global population controls and owns 45.8% of the global wealth, the world's wealth. Anyone heard or seen this? And it's kind of like a conspiracy theory, Andy. Oh, the rich people are all controlling the wealth. Tell me, team. Tell me, folks. What do you think? What is the world's wealth? To be in the 1% of the global population that controls 45% of the world's wealth, how much dollar value, net wealth do you need to own? Is it 10 million? Is it 50 million? Is it 1 million? Is it 100 million? What is it, folks? What's the number? What do you guys think? Chuck it in the chat for me. Because this is a really interesting stat. The whole world. Is it what's the value? Like, if you're in the top 1% of wealthy people in the world, Rothschild. Yeah, there you go. Look at this, team.
Bob, I knew somebody was going to throw that out, but yep, Joel's on the money. Jeanette's on the money.
There you go. It's $1 million and over, right? $1 million and over. Andy, the average Australian accidentally bought a property like 10 years ago, 20 years ago, and has kept it. It's there, right? So, and I like perspective, team. Sometimes we get caught up in the kind of the conspiracy theories of the world, right? If you own more than $1 million worth of wealth, if you've got $1 million worth of wealth, you're actually in the 1% of the global population who control 45% of the wealth of the whole world. That's all, Alison. Like, yeah, woohoo! You're in the 1%ers, mate. And I really like putting stuff in perspective sometimes, because we think, oh wow, it's 100 million, it's 50 million, it's a billion, it's a trillion, because Elon Musk is worth gazillion, trillion, $billion or whatever. It's not, team. It's not. There you go, Jeff. You're there. Yeah, and this sometimes it's kind of like puts life in perspective, right? We are in the 1% of the world, folks. Wow.
We're 2% of the population, or 2.2% of GDP. Sorry.
Yeah.
But we're pretty privileged to be here, and I think it's Gary V said it, or maybe it was Ricky Gervais. I'm not quite sure. We've got like 1 in 7 trillion chance of ever surviving. Or 1 in 7 trillion chance of actually being here on the planet and actually surviving as a human being.
Yep.
And then of that 1 in 7 trillion, we're in the top 1.1% of 8 billion, which is pretty incredible.
There you go. So I thought that might be a nice way to sort of give it a little wind up. Harry reckons, watch out, we might get shut down by the
What does that mean? I don't get it. The fact checkers.
Who knows? It could be the cancelling culture, or who knows what that is. But Harry,
yes, they're going to shut us up, aren't they? Yes, it's the social censoring, Jason. I'll tell you what, if they did social censoring, then none of the television stations would have any Facebook channels, would they?
Well, there you go, mate. Well, listen, folks, plenty there. Andy, there's still stuff to talk about. We didn't even get there, and we didn't even get to people's questions. But time went, I had fun, folks. Anyway, hopefully you guys did.
A big shout out to John, our incredible fact checker out there, John Hawkins. It's incredible. I'll concede to you that that absolutely. I think that sometimes we need to put things in different perspectives, but I'll concede that yes, you're right at the end of the day. Alison, yes, there is a new world order, but appreciate everybody dropping the chats in. It was really good fun actually interacting with everyone tonight.
Yeah, good to hang out with all of you guys. Thanks for being here tonight, folks. Good to catch up with you again, mate. Been missing you a couple of weeks, Went without my Friday fix. It was just, I don't know what to do with myself. All right. Well, that's it, folks. Well, I think we'll call it quits. I think it's a good night from him.
And it's a good night from me. Good night, everyone. Have a great weekend.
Folks. Have a good weekend. Bye-bye.